Hello everyone, my name is Melissa Cohen. So today we are going to actually talk about events that happened yesterday on January 26th. So the Feds, we just saw them, the Feds, the Federal Reserve, including the chairman, Jerome Powell, they met yesterday on Wednesday to discuss potential increases in interest rates. So several months ago, they announced that they had intended to raise interest rates over the next couple of years. So guess what? They met yesterday and they are intending indeed to raise interest rates. So just a little bit more background information. So kind of what this means is they're hinting. They haven't actually set the official rate yet, but that means everybody's gearing up. Everybody, as far as, because you're going to say, well, what does this mean to me? Like, that's great, the Feds, this government body somewhere, that what, I don't know what that means. That means basically you can get, if you're going to buy a house, you're going to refinance a mortgage, you're going to buy a car, you have any credit card debt, or you just not able to pay off your credit card every month, all of those rates and the savings rates and things at the banks, those are all going to change. So kind of what happens behind the scenes are the banks lend to each other overnight, it said, and so that rate is going to be increased. So it's going to cost the banks more money to borrow from each other and such. So basically that trickle effect is they raise the interest rates on credit cards, they raise the interest rates on mortgages, they raise the interest rates on refinance mortgages as well, they raise the interest rates on credit cards. But guess what? When it comes to your savings account, yeah, they'll raise it. It's just going to be much longer down the road. So, I think a high yield savings account is still like 0.55. I think that's kind of what I'm finding. Still under 1% for a high yield. So maybe, the trickle effect after they actually raise these rates, and then the credit card companies take their turns. Then maybe for us little consumers trying to save our pennies here, we may get bumped up to 1%. Maybe we'll get bumped up even more than that. But, you don't know what that's actually going to be and what the competition is for the banks to actually pay us for saving our money and them using our money. It's not like, we should be rewarded for saving our money. We should be rewarded for putting our money in the bank that they are now using to lend it to other people, right? So if they're getting an 8% return, why are we still getting a 0.55% return for our money? Okay, so let me go ahead and get into some specifics here. Sorry, I have to kind of get my glasses on here. So it said specifically that they are looking to do a quarter percentage, that's 0.25% increase for the short-term borrowing rate. It's the first rise that we've had since December of 2018. So the good news, it's been 3 years since they've actually increased any of these rates and such. But what that means also is that if you're probably intending to buy a house, especially if you're intending to remortgage or refinance a house right now, you probably needed to get on that. If you've kind of been hesitating and such, definitely now would be a time to do it. The Feds are stating, inflation is above 2%. There's a strong labor market, so they're going to go ahead and raise these funds as well. They're also going to slow down their bond buying. And that in February, they're going to slow it down to just $30 billion that they're going to buy. And then in March, it says that they are going to stop buying the bonds and such as the rates increase. So I did say, I remember from the other article a couple months ago, I think I did a little video on that as well. It said that they are projecting to raise interest rates for the next 2 years. So that also signals to you, if you are going to, it's kind of say, oh, if you're going to buy a house, do it now. That's a huge purchase. Usually that's location, that's trying to find a good price on the house with inflated prices. I can't tell you to rush on that. But if you're planning to refinance a house, definitely do that now. If you are wondering, hey, do I go ahead and start putting extra savings or money towards the credit cards, that are I think it said that the average is over 16% for a credit card interest rate, then yes, you need to start putting money towards that, because companies can raise those rates anytime. So if you've got a large balance, that interest rate's only going to get higher. So if you have extra money, you have the desire, like, hey, I need to really pigeonhole and put every penny I have to paying off this credit card debt, now's the time to do that as well. All right. Thank you for joining me. If you have any questions, feel free to reach out to me via email or visit me on the website. Thank you very much.